President Donald Trump announced new tariffs. These aren't just minor trade tweaks, we're talking about sweeping changes that could shift the global economic landscape and shake the stock market. In this video, we'll break down what the new tariffs are, why they were implemented, how global markets are reacting, and what this could mean for your money. So whether you're an investor, a curious citizen, or someone just trying to make sense of all this economic news, this is one video you don't want to miss. Let's get into it. On April 2, 2025, Donald Trump announced a bold new tariff strategy. He called it Liberation Day, and the message was clear. It's time to take back control of America's economy. In Trump's words, the U.S. has been treated unfairly for decades when it comes to trade, and this move is meant to even the playing field. So, what exactly is happening? A universal 10% tariff is now placed on all imported goods into the United States from every country. On top of that, there are reciprocal tariffs, basically higher tariffs targeting specific countries based on trade imbalances or perceived unfair practices. Some of these are steep. China, for instance, faces a total of 54% tariffs, while countries like Vietnam, India, Taiwan, Japan, and the EU all face tariffs ranging from 20% to nearly 50%. There's also a specific 25% tariff on all imported automobiles. That includes foreign-made cars, car parts, and even electric vehicles. This isn't just rhetoric. These measures are active, and they're already being enforced. Trump says this is about national security, economic independence, and fairness. He's argued that the U.S. has run massive trade deficits for too long, relying too heavily on foreign countries, especially China, for goods that could be made at home. The idea is that by making imported goods more expensive, American companies can become more competitive, increase production, and hire more workers. It's a protectionist move, one aimed at reshaping supply chains and rebuilding American manufacturing. There's also a political angle. With the 2024 election behind him and a second term underway, Trump is doubling down on the America First policy platform that defined his earlier presidency. Wall Street did not like this. Within hours of the announcement, the S&P 500 futures dropped 3.4%. The Dow Jones fell nearly 3%. The Nasdaq, full of tech companies that rely heavily on international supply chains, plummeted almost 4%. Big names like Apple, Amazon, Nike, and even Tesla saw significant stock dips. Some companies lost more than 6% of their value in a single day. Oil prices also fell sharply, down more than 4%. That's a signal that investors are bracing for slower global economic growth and potentially weaker demand. Basically, markets are reacting to one thing: uncertainty. When tariffs go up, costs go up. That eats into company profits, slows down consumer spending, and can even trigger layoffs. And for traders, uncertainty is the enemy. Let's talk sectors. Technology companies took some of the biggest hits. These companies often manufacture or source key components overseas. Think chips, semiconductors, batteries, and rare earth materials, many of which come from Asia. Retail is also in trouble. A company like Walmart, for example, imports a massive amount of goods from China and Vietnam. Higher costs on imported clothing, furniture, and electronics could get passed directly to the consumer. That means lower sales and thinner margins. Auto manufacturers, particularly those importing cars or parts from overseas, are another group at risk. That 25% auto tariff is no joke. It hits brands like BMW, Toyota, Honda, and even Ford, since many American-branded cars are still made in Mexico or Canada. Meanwhile, energy stocks are showing mixed signals. Some oil and gas companies are seeing lower prices due to fears of slower global demand, while others may benefit if trade tensions eventually stabilize. If you're investing, or thinking about investing, this is a time to be careful but not necessarily panicked. First, remember that markets often overreact to major headlines. Yes, there's volatility. Yes, some sectors are going to take a hit, but long-term investors can use this time to reassess their portfolios. Are you overexposed to international tech? Do you own retail stocks that rely heavily on imports? Is your portfolio diversified enough to weather trade-driven shocks? This might also be a chance to look at sectors that could benefit from protectionism, like domestic manufacturing, agriculture, or infrastructure-related plays. At the same time, you'll want to watch inflation. If companies start raising prices, consumers may pull back. That affects spending, which affects earnings, which hits stocks again. Aside from the markets, let's talk about the real economy. These tariffs are essentially a tax on imports. Businesses pay more for goods, and they usually pass those costs on to consumers. That means everything from electronics to clothing to cars could get more expensive in the coming months. Higher prices mean inflation, and while inflation has been cooling off since the pandemic, this could reignite it, especially in consumer goods. There's also the issue of retaliation. Countries like China and the EU are already hinting at countermeasures, tariffs on American products like soybeans, machinery, and vehicles. That's bad news for US farmers and exporters. So while some sectors might benefit from protectionism, others, especially those that depend on international markets, could suffer major losses. Let's look at how the world is responding. China has called the move provocative and is preparing its own list of tariffs targeting American goods. The European Union expressed disappointment, saying this could jeopardize trade relations and lead to a full-blown trade war. Japan, South Korea, Vietnam, and others have voiced concern and are reviewing their options for retaliation or negotiation. What we're seeing is a dramatic global shift. Countries are reconsidering their supply chains, alliances, and trade deals, and it's all happening in real time. So where's all this going? There are a few possible outcomes. First, short-term chaos, long-term realignment. Markets stay volatile for a few months, prices go up, but eventually, companies adapt, bring manufacturing closer to home, and the US economy stabilizes. Second, an escalating trade war. If other countries retaliate aggressively, we could see more tariffs, more barriers, and a drop in global trade. That's bad for nearly every major economy. Third, negotiated settlements. Some experts believe this is a negotiating tactic. Trump sets the bar high, gets other countries to the table, and eventually agrees to lower tariffs in exchange for concessions. Fourth, political fallout. These tariffs could become a defining issue in American politics. Some voters will love the patriotic America First messaging, others will feel the pinch in their wallets and push back in the next election cycle. If you're watching all this unfold and wondering what to do next, here are a few simple steps. Stay diversified. Don't go all in on any one sector or country. Watch consumer spending. Retail sales data over the next few months will tell us a lot about how Americans are responding to price hikes. Look for domestic winners. US manufacturers and small-cap stocks could benefit if they don't rely on imports. Avoid panic selling. Volatility doesn't always mean it's time to jump ship. Sometimes it's just part of the game. And finally, stay informed. Policies like this don't happen in a vacuum. Watch how other countries respond. Watch the Fed. Watch the inflation data. So, to sum it all up, President Trump's new tariffs are a massive, bold play designed to reshape America's trade landscape. They've sparked market volatility, stirred international backlash, and brought back memories of earlier trade wars. Whether this is the beginning of a new economic era or just a political power move remains to be seen. What we do know is this: the markets are reacting and smart investors are watching closely. Thanks for sticking with me through this deep dive. If you found this video helpful, give it a like and hit that subscribe button so you don't miss our next market update. And if you've got thoughts on the tariffs or how they're affecting your investments, drop a comment below. I'd love to hear what you think. Until next time, stay informed, stay diversified, and stay sharp.